finance sector has become the important actor with the impact of globalization and technological improvements. However, poor management and insufficient control of risk will lead to banking failure, which resulting in major financial loss and bankruptcy. Hence, there is a need of control mechanism to ensure success in Islamic financial institutions. In regards of that, what is actually control mechanism? It is relate with internal control, which defined as mechanism, rules and procedures implemented by a company to ensure integrity of financial and accounting information, promote accountability and prevent fraud. To be more clear, control mechanism can be an effective and efficient internal control system to prevent or minimize from internal or external risk factor. Malaysia adopted dual financial system and centralized model where conventional and Islamic banks operate side by side. The primary sources of legal governance is based on Izzah Act 2013, the Malaysian law which enacted to provide regulation and supervision for Islamic financial institutions. In Malaysia, the main regulatory authorities are Bank Negara Malaysia and Sharia Advisory Council. As by that, Islamic financial institutions need to follow the rulings according to policy document of SACBNM. Here we can see the centralized model that been adopted in Malaysian Islamic banking. 4 components of centralized model. Firstly, the approach is based on Central Sharia Board, attached to the central bank which rules on the conformity of products and activities. Secondly, each Islamic banking shall have its own Sharia board, but it must comply with the standard rules. Thirdly, central bank will reduce the differences of interpretation. Lastly, 2 Sharia governance structure has been established comprising a Sharia Advisory Council at Central Bank of Malaysia and Sharia Committee in each Islamic banking. Sharia Committee role will basically has the responsibility to provide objectives and sound advice. Not only that, they also need to ensure that Islamic financial institutions' aims and operations, business, affairs, activities comply with Sharia. Furthermore, Sharia Committee need to assist Sharia review, Sharia audit, and Sharia risk management. Bahrain adopted dual financial system and decentralized model, where the Sharia boards of Islamic banking are independent with central bank. This is the decentralized model adopted by Bahrain Islamic Bank. Decentralized model in Bahrain refer to the permissibility of contracts and Sharia compliant financial product is decided at the level of institutions by the Islamic Banking Sharia Committee. They still accept opinions from Awaifa Board. Islamic banking need to establish Sharia Supervisory Committee to ensure the activities in line with Awaifa standards. Second, they need to submit the report to shareholders. Third, Awaifa will help to harmonize concepts and application among SSC. Sharia Supervisory Committee will assist Sharia internal audit and Sharia risk management on Sharia matters. As for conclusion, Sharia compliance allows the Islamic banking to differentiate from conventional banking. In Malaysia, SC will need to assist the IFAS, while in Bahrain, SSC will need to advise the IB in making decisions pertaining to Sharia laws.